right. Good morning, everybody. Hopefully, y'all are having a great Tuesday. We're getting a late start to the week. Hopefully, y'all had some great holidays. Merry Christmas to all the who celebrate. Happy Kwanzaa and what other holidays there are. I'm not sure. We got New Year coming up, so got a sale for the premium Discord, 60% off until the New Year. So you can join with the pin link. And with that out of the way, let's get started with our analysis. Let me pull up the Discord link, actually. And I'll read y'all my analysis for today. Well. So my analysis this morning, at least, has been that we're going to have a pretty slow week ahead. So I said, get ready for a slow week. Markets are off to a snail start with SPY positive 0.1%. Hardly changed from Friday, with the most popular news being on the euro, Tesla, and oil. So basically, the financial journalists are sleeping through the holidays, so expect a pretty boring week ahead. We might get some volatility on Thursday, to maybe, due to the jobs report that's being released. But other than that, I am expecting a very flat market this week, maybe slightly positive. Credit spreads today, yeah, seems like a likely trade. Maybe put credit spreads ahead of Wednesday and Thursday. That way we can take advantage of the potential melt up is what I'm expecting. Either you're going to trade flat or you're going to slowly melt up due to the seasonality. So put credit spread is probably going to be in the works this morning. That's going to expire either tomorrow or Thursday. Not really sure. It really depends on how much credit I can get out of it. But I already drew up my price levels that I'm watching. So our expected range is between $378 and $390. The bell is about to go off and scare the shit out of me. But I have these price levels in between. $379.65 was the open of Friday. Then I had the close of Friday at $382.90. So that's the most significant price level, hence why it's much larger than the rest. And then there was a gap up. Sorry, the bell's about to ring and scare me. There we go. All right. So the market is finally open, and then price levels that I have is $384.38 from the gap up that we experienced. Then $387.50, $380.75 is what that looks like. $389.75. It's kind of hard to read with the gray on gray. And then $393 at the very top if we go outside of the risk range, and $377.01 if we go to the bottom end of the risk range. But I'm going to assume by tomorrow we're probably going to stay above $379. I think that is a pretty safe bet. So I'm actually going to open that on my phone. That'll probably be the easiest. So I'm going to be doing a put credit spread, assuming that SPY is going to stay above 380. And I got to check how much credit we get out of it. If there's not enough credit in it, obviously, you don't want to take that trade. You want to make sure that the risk-reward ratio is good for it. But we got 33 viewers already. That's good in the first minute. Only 2 likes, but hopefully y'all get those up. So I'm going to set my expiration date for tomorrow, Wednesday, 28th. I'm going to say it's going to stay above 380. Actually, if I say it's going to stay above 380, the credit is very good. But if I go one strike price lower and say that it's going to be above 379, let's see how much that pays. It's probably going to pay a lot more now that the markets are dropping immediately on open. Interesting enough. But let's see, if we choose 379, strike price that it's going to stay above. I'd say there's a decent chance. And right now we are pulling back a little bit, so maybe we wait out this first 5 minutes, see where the market's head. There wasn't really any major news. We had the goods balance, which usually the markets don't react to, and then retail inventories was down 0.3%, which is disinflationary. Whenever retail, actually no, that is okay. So the supply is going down, which means that the prices should actually go up. If you shift supply to the left, prices should be going up. So that's actually inflationary. No bueno. Whenever retail has more inventory in stock, then they try to get rid of that inventory by creating sales. That way, their back rooms aren't just overfilled to the roof. So that is actually inflationary, which is not good news. So maybe that's why we're selling off this morning, but you would have expected that sell off immediately. I guess it did sell off immediately at 8:30, but it just wasn't the huge drop that we typically see on data. But let's see, the put credit spread that I'm looking at is still trading for the same price, even though we came down a bit more. It's a very slow morning, though. Like, this is hardly any action for the first 5 minute candle. Usually you would see this going from 382.90 to like 380 within the first 5 minutes, but you're not even getting half of that right now. So we'll see how this goes. But my assumption, we're going to stay above 379 by end of day tomorrow. And the credit is okay. Maybe if we wait for it to hit 381.81, we might catch a bounce there. So let's wait on the price to hit first. Let me zoom in, I guess. Currently trading at 382.06, so we're getting close enough, honestly. The credit just went up by $1. So this trade, I feel pretty confident in. And I think it's probably worth around like 400. So I'm going to put in 20 of these spreads. And I do want to exit, obviously, if it starts going south on me, probably at this 379.65 mark. So I'm going to create an alert at or below 379.65. That was the open of Friday. That's where I got that from. But I'm going to open this put credit spread. Right now we're trading at 381.81, so hopefully we catch a bounce there. And I actually got more credit than I asked for, which is good. Robinhood's finally giving me decent prices. But let me post that over in the premium Discord. So put credit spread, assuming we're going to stay above 379, but if we go below that 379.65 mark, then I will contemplate exiting. Probably going to exit part of it just because it might be a fake out, but we'll have to see. So a new options alert, P1F, okay. Just opened a new SPY put credit spread. That one expires tomorrow, the 28th, 12/28. And I got 25 credit each. All right. Expecting a slow melt up this week with no major economic data between now and Thursday. So decided to take on a put credit spread, assuming we'll stay above the risk range. Stay in the risk range, I should say. will stay inside the SPY risk range between 378 and 380, right? 390, sorry. But yeah, looks like we did break that 380, 181 level, but we'll keep an eye on it, see how this lasts. How does volatility usually look like in January? That's a great question. Last January was, I think it was pretty rough, if I remember correctly. Let's look at the max by monthly chart. Get rid of my watch list here on the left so we can see. So if we look, let's say 10 years back to 2012, I don't know if I want to use 2012 as a proxy. I kind of want to use tightening cycles as a proxy. So 2007, 2008 would be good proxies. I think it was June of 2007 when they started to, actually that's when they started to drop the rates. When did they start to increase the rates? That's more important. So let's go to the Fed funds rate. So they started to raise rates in December. So let's look at January. Obviously, this was a lot slower. So we could even use January of 2017 and January of 2016 as good proxies. Those were the last times that we were starting to raise rates. So SPY ended up going from, let's see, in January of 2015, or sorry, let's see, that's January of 2016. 2016 and 2017 is what we need. We went from 200.49 to a close of 193.72. So pretty volatile month in December or January of 2016. Change from open to close was 197.54. 200. Sorry, let's see. Math is hard. 200.49 minus that is 295 on the $200 stock. So that's like 1.5%. Nothing major there, but the drop to the very bottom, the low, was, let's see, 181.02, 19.5. So that's almost a 10% move that we got to the downside in January of 2016 and January of 2017. Kind of the opposite, it looks like. So we had a green January in 2017. Or no. Sorry, that was December 2016. But January of 2017 was hardly any movement at all. We went from 225 to 227. So that was like a 1% move, and the biggest change that experienced was 225 to a high of 229. So 4 points on 225, it's like 2%. So based on those two, not really much movement. But let's look at 2007, 2008. So 2007. Oh, that's actually 2008, and that was bloody hell. Opened at 146.53, closed at 137. So 146.53, 137.37. $9.16 move on a 146 price is a 6% downside in January of 2008. And then January of 2007 was a green January. That was before the Fed started tightening in June or July. Yeah, I think this is when they started the tightening cycle. Let me see. No, they started the tightening cycle in 04. Okay, I just keep thinking of when they reversed it. But January of 04, not a very volatile month either. 118 to 120. So like a 2% move there. Not really huge open or highs and lows. What did it do in 2005? January 2005. Again, not much movement there. We went from 121 to 118. So that's like a 2% move. It's decent, but not much. 2006 went up like probably 2% or so. So not really much movement, even during the tightening cycles. Interesting enough, it doesn't seem like volatility is that super high, even during the tightening cycles in January. So you probably see a lot of volatility. October is always the most volatile month, and you could probably look at the VIX too to see how volatile it is each January. I think this is each October that I have in red. But if we look at January 05, hardly any movement. 06. Actually, this is a quarterly chart. Dang it. Time frame. Monthly. All right, so if we go back to 04. 1796 to close at 1663. Hardly any move. A low of 14 now. So volatility dropped decently in 04. 05 went from 1339 to 1282. Barely any movement there. 06 was 1225 to 1295. Again, hardly any moves. Volatility is very high, though. If you compare it to like 04 to 08, whenever Fed was raising rates so quickly, volatility is pretty extreme right now. But partly, I think the reason for that is because back in 07, 08, it was much harder to buy and sell stocks. Like right now, you can go on your phone, press a couple buttons, buy a stock or sell a stock anytime you want. But if you wanted to buy and sell stocks back in 2007, 2008, you would have to call up your brokerage. You literally have to place an order by calling up customer service on your broker. So it's a lot easier to access now, which kind of adds to the volatility, I would think. Do I ever look at IV rank or IV percentile? IV percentile I really love. Having a hard time wrapping my head around it. So IV percentile, it's very simple. So if you look at a bell curve, this is basically a distribution. That is not the bell curve that I want. It's basically a distribution of where implied volatility has been over a given time frame. So if we go to SPY, I'll add the study set. I have IVP solo, so just IVP alone. I don't like to clutter my screen with a lot of different things, but can't pull IVP from a max for some reason, but let's do 5 years. IV percentile is at 68. So that means that implied volatility right now is in the 68th percentile. So 68% of the time, implied volatility has been lower than where it's trading right now over the given 5-year time frame. If we look at the 1-year time frame, implied volatility is at 32. Sorry, implied volatility percentile is at 32. So that means 32% of the time over the last year, or about 1/3 of the time, implied volatility has been lower, which means that 68% of the time, implied volatility has been higher over the last year. So that means that implied volatility right now is pretty low. So if you look at a bell curve, that would be within this standard deviation right here. Right, the first standard deviation to the left. So it's not extremely low. That would be 13.6 plus 2.1 would be 15.7 plus 0.1, 15.8. So if it's below 15.8, that's extreme low. But right now it's at 32, so it's somewhat low. And volatility has a tendency to revert back to its mean. Right now, the VIX is at 2271. If we get rid of the implied volatility percentile, don't really need it for this. The average implied volatility, or from the VIX, the average price of the VIX over the last year has been 25.50. So I used a 252 moving average line in order to come up with this number. And I did that a few days ago, but the average shouldn't change by much, just given, a huge data set of 252. So, yeah, implied volatility definitely has some room to go up. I've been buying $100 worth of UVIXI each day, and I'll probably do that today too. And I think that it's probably going to go up in about a few weeks. So if we look at the cycles here, they last about 2 to 3 months, and we're just about 1 month into the current cycle. So we still have between like 4 and 6 weeks to see a peak in the VIX if the trend continues. Obviously, the trend could break, VIX could come down, and I could be totally wrong, but I'm okay with being wrong. I never risk more than I'm okay with losing, so it doesn't really matter as much. Can you make an Aries tutorial? It would make my day. Yes. I will work on that as soon as I'm able to get rid of the 90-day restriction. I'll call them up after this live stream. I tried to call them last week to get it removed, and they told me that I needed to deposit more money. So probably have to deposit like $2,000 into it, and then maybe I can trade from there. But we'll see if that's actually the case, or if the customer support person was just lying. Anyway, yeah, I'm gonna buy some UVIXI shares today. So my plan is to just keep buying about $100 of UVIXI each day. Dollar cost average. Whoops. It's trading at 720 now, so I might even buy a UVIXI call option. UVIXI. But $100 worth of UVIXI right now, just the shares themselves. So I'm picking up about 14 shares. Throw a referral in there. Yeah. Let me find my referral code right quick. Let me post this and I'll send the referral code. I like their platform. They still have some work to do. But overall, very nice, very clean platform to use. Personally, I'll probably use that for like my small account. And then my current Robinhood portfolio, I'm switching that over to E-Trade just because they have the fastest and the best fills. So just bought $100 worth of UVIXI. So now let me pull up the average price that I've got these at. My average price dropped to $7.49 a share, which is good. I've got 338 shares total. Definitely building this position up. Let's see. SPY is dropping right now down to look like 380 is what I just saw. So down 0.6% today. Getting close to that 379.65 mark. I don't know if we'll hit it, but kind of seems like a pretty rough sell-off so far this morning. And might end up catching a bounce on this candle, but my guess is as good as yours. But yeah, if we hit that 379.65 mark, then I'm gonna close part of the put credit spread position. But for right now, feeling pretty safe in it. So let's head on over. Planning to move my account to Webull. Not a huge fan of Webull just because they're Chinese owned, and not that we don't give our data to China anyway by using iPhones, but I'd rather not give that much more information over to China. But let me find the referral code on Aries right quick. Join Aries. All right. So whenever you join with this link, you will get $100. They do it in $20 increments, so once a month, I think, for 5 months. So you have to stay on the platform for 5 months in order to get the full $100. You'll also get 1 month of free premium access to my Discord whenever you sign up, but you have to make a deposit of $500 or more, and I think you have to keep the balance above $500 in order to keep getting the $20 increments, if I remember correctly. So we got 50 viewers in here. Wow, it's a little bit surprising given that it's a Tuesday. I would have expected less people on the holiday break, but glad y'all are here, and hopefully we can make some money today. All right, so right now I'm down 120 on the put credit spreads that I had open, but I am up $90 for the iron condors that I snagged, I think last minute on Friday. So I picked these up at 29 cents. I opened 30 of them for a total of $870 of credit. Right now they're going for 26 each, so still think that there's a good chance that we trade flat unless we just keep on headed down to that past that bottom risk range of 378. But I can't imagine, given the trading volume, that we're going to see that low. But let's actually see what the trading volume looks like this morning. So we're about 30 minutes into the open here. Volume is actually somewhat high. Let me check. Let me shorten our time frame. So far this morning we have 4.5 million shares traded. Last Friday at 9 a.m. we had 5.1. So we have just as much volume today in the first 30. Oh no, I guess it closes in 5 minutes if we're going off the 9 a.m. candle. So less volume, about 5-10% for first hour trading here. Thursday we had, let's see, 6 million in volume. So yeah, definitely a slow day, slow morning. But we are getting a decent amount of selling. Not a lot of people too confident in the Santa Claus rally, I guess, but let's see, 5.9 million on Wednesday. So even Wednesday, one of the slowest days, not really much volume. Tuesday was 4.9, so it's more similar to Tuesday, and we got a decent sell-off on Tuesday too. Interesting enough, even with the low volume that morning. SPY went from 384 all the way down to 378, 6-point move, 1.5%. I'd be shocked if we saw 1.5% today, but maybe it's in the cards. We'll see. I mean, if we're just going to say it's going to be a momentum day, then I would say probably going to continue to go down. If it's algo driven, then they're just going to trade with momentum. And this morning's momentum is definitely downward. So maybe we could do 384 call credit spread that expires today. Maybe make some money with that. Hopefully there's no crazy reversals midday. Would be ideal. But currently trading about $3 away from that. So let's do 384 call credit spread. The pay for it is kind of shit. We could either wait until SPY goes back above 381.81 and get a better credit. Not sure when that's going to happen, obviously. But let me do an alert at or above the 381.81 price level. Above. We could do 383 call credit spread. Even that one is not paying a very good credit. So I think I'll avoid. But let's see. I mean, if the momentum does continue, if we're just going to have an algo-driven day, driven by momentum, I think we could go below 380 pretty easily. We're already trading at 380.5. So we could do a put debit spread based on the momentum. So if I do a 381, 380 put debit spread, the debit that I'm paying is 50 cents, which that's actually pretty decent. That's about what it should trade at. And once it hits the 380 price level, you could make about 10 cents each. So you're getting about a 20% return on that. Let's see. This trade, I'd probably only put like 300 or 400 down. So let's see. 6 of these at 50. Yeah, 6 to 8 of them. I'll just do 7. Lucky number 7. Hopefully we get lucky with this trade, but let's see. All right. So I picked those up. If we go above 381.81, I'll probably close. So that'll be my sign to close out of that one. But let me post that in the premium Discord. New options alert. Whoops. There we go. P1F. Just opened a new SPY put debit spread. That one expires today. It's a day trade. 12/27 expiration. Paid 50 each. And then my strike price is, yeah, there we go, 380. Okay. Momentum is down this morning after, what report was it? It was the retail inventories. Retail inventories showed lower store inventories, which means that retail can raise prices now. Inflationary effect. So hence the drop off this morning. But yeah, we're almost at that 380 mark already. I just opened these up $7. I would think that they would be going for more, but I don't always think correctly. Let's see, we're trading at 380.25. I would think that they should be going for 55, but the market's not willing to pay that yet. We'll see how this shakes out. But yeah, just taking advantage of the momentum this morning. Something that I've kind of always struggled with is trading with momentum. But looks like we just came below 380 already. Damn. That's wildin'. And these are only going for 55, so they're cheap. They are very cheap. The question is, when does momentum stop, though? That's what I've always kind of struggled with, is figuring out when momentum changes. Let's see. No questions in the chat, but we tagged the 379.65 mark. So let's see if we break or if we follow through with it. I don't know. 379.75. These ought to be going for 60 cents a piece easily. Yeah, 57 cents. So they're still cheap as hell. Ugh, it almost makes me want to buy more, but I put the risk that I wanted down. Oh, yeah, it looks like we caught the bid or bounce on the 379.65 mark so far. So we'll see if we get the follow through or not. Right now, SPY is down 0.8%. I'm very shocked that SPY would be down 0.8% on holiday week, but let there be carnage. SPX flushed through the 38.17 price level. Tesla was feeling it this morning, and I bet it's going to get even worse. Down 6.5% today. Jesus Christ. This stock never catches a break. Every day it's like down 5-6%. Absolutely brutal. Still dollar cost averaging into it. Don't really care about the day-to-day movements. Don't really care about Elon's antics, as everybody loves to complain about. If you bought into Tesla stock, you bought into Elon. And you get what you get. Apple is dropping today too. So that might be what's dragging the market. We fell below 130. It's down 2.1% today. Wow. That's tough. That's real tough. Let me get rid of these drawings. None of these price levels are relevant anymore. Damn. That's a new yearly low for Apple. Just when we thought Santa Claus was going to save us. Rough. Oh, man. Yeah, so SPY ended up bouncing on that 380. Oh, God dang it. That sucks. Go figure. Yeah, so we bounced on that 379.65 level. Which is good for the put credit spreads, but not good for the put debit spreads that I ended up snagging. Or break even for those. I don't know. Let's see if the momentum actually shifts. It just kind of seems like it's slowing down at the moment. Alright, it kind of looks... I don't know if y'all ever played Line Rider whenever y'all were younger, if you're still playing Line Rider, but it kind of looks like a little slope going on, like a U shape almost. I trust Elon, but not with my money. Yeah, I mean, it is what it is. Elon's a crazy man. The same crazy man that sent the stock up 3,000%. It was the same one that's making a drop by 50-60%. We look like we're going down, breaking supports in the big volume. Yeah, I mean, I'm not really seeing much volume this morning so far compared to like Friday of last week and all the week prior. But it's like Tuesday volume where we fell like 1.5%. Could happen. I mean, if Apple keeps falling the way that it is, down 2% today, then it's gonna weigh pretty negatively on the market. Apple put's starting to print for you. Nice, good job, Cameron. Value names are still holding up, so it could be rebalancing and tax loss harvesting. Yeah, that could be the case. People could be tax loss harvesting since basically every stock is down. Maybe that's why we're getting the selling so far today. Value names are still holding up, so I guess the Dow is doing okay. DIA only down 0.2% versus SPY down 0.6%. So we're seeing a lot more weight down in the tech space with QQQ down 1.3%. Jesus Christ. That's a pretty rough day for the Qs. Let's see what might be changing that. I mean, we did have a decent climb for the 10-year Treasury yield, so that must be why tech is selling off. Yeah, we had another gap up for the 10-year Treasury yield. So whenever the yields go up, tech stocks especially come down because it costs them more money to borrow at higher interest rates. So the 10-year Treasury yield went from a close of about 3.75 to a high this morning at 3.83 and currently at 3.798. So the markets might actually be waking up to the fact that the Fed is going to raise rates. Maybe. We'll see. I thought you could buy a put and sell a put on the same. Yes. So that's a credit spread or a debit spread depending on which one you buy and sell. I bought a put for TQQQ, then sold a put for the same amount. Robinhood flagged you as a day trader. Well, if you did the same strike price, the same expiration date, then you will that will count as a day trade. But if you use separate strike prices, it shouldn't count. So what you're doing sounds like what's known as a Ghetto spread. So basically what you do is you would say, I think UVXY is going to go up in the next 3 weeks. I would set my expiration date for the 20th, and then choose my strike price based on where I think the stock is going to head above. So UVXY is currently trading at 722. I think VIX itself is going to go up by about 10%, which means that UVXY should go up by 15% in the next few weeks. 7.2 times 1.15 would be a price level of $8.28. So to be conservative, we could call it $8. So we would want to buy a strike price below that. So we would buy this one, right? Continue, review the order, execute the order, and then we would sell the $8 strike price that we think it's going to be above once the value for this has dropped a little bit. So this is what's known as a Ghetto spread. Ideally, you would want to sell this new $8 call for $62, or what you pay for the $7.50 strike price. That's ideal, obviously. You don't always get ideal, but I actually might do this trade. I think that might be a decent idea for us. I do think that UVXY is going to be on the climb over the next few weeks, again, based on the 2-3 month cycle. So I do want to snag up some UVXY calls. So the 750 strike price is what I'm looking at, and I might turn it into a Ghetto spread depending on how much money I want to spend for it. I think I'd be willing to put up like $600 to $800 for this. So right now these are only going for 18 cents a piece. So I could buy quite a bit of them for 600. Let's see. I could buy 50 for 900, which is a decent price. I'm just going to pick up 40 for right now, so... Actually, I'll do 50 and then I'll turn it into a Ghetto spread to reduce the value of them, or reduce the price of them. So, alright, so I snagged up those 750 calls on UVixie. UVixie is very calm, yeah, it is pretty calm given that the stock market has fallen as much as it has. Just bought a new UVixie. God dang it. This one This one expires on the 20th, I think, hopefully. I chose the right strike price, yeah. Shit. I chose the wrong strike price here. It shows 12.30, but I'll change that over. No wonder it was so cheap. So I meant to buy 120 expiration. So rolling this immediately. So let me show y'all how to roll, I guess. Robinhood has the neat little feature to where I should be able to just take this, roll this option, and set the expiration date for the 20th is what I wanted. And the same 750 strike price. So I'm adding 21 days to the expiration. Net debit of 46. I don't want to open that many. I don't want to roll all 50. Why can't I decrease the position size? That's kind of weird. Guess I'll have to do it manually. Great. So, sell the 750 call that expires this week. And then buy the January 20th expiration. So it costs 46 each. These are about 4 times more expensive, so I can only buy 1/4. So I'll change the ratio here 4-1. And I'll actually get a little bit of a credit for each of them. So I'll do 50 contracts. So I'll get $150 back. Let me see what the bid ask is. $8 for the freaking ask price. What the hell, man? The mid price is 03, so I'll probably have to do it for 05. So I'll pay an extra $250 to open this. And it's going to be a debit since I'm paying out of pocket to open more. Oh, looks like the bid or the ask just dropped, so I can get it a little bit cheaper. Really? Why do I need a 2-factor? I've literally been trading all morning. Okay. 625, 359. Invalid code. God dang it. 755, 338. Alright. This order is invalid because you do not have enough shares to close your position. What do you mean? Ugh. This is annoying as hell. I have these, and I want to buy January 20th. Game my dang spreads, man. And it's not a spread, I guess. It's regular calls. So we had 15 and 62. So adjust the ratio 4-1. Oh, okay. So I guess we can only do 12 of these. Whoops. And the ask is 4. So we'll pay an extra $48, and I think we'll still have a little bit left over of the 30th expiration date. Oh, come on now. Really? Do I really have to overpay for this? Ugh. Why can't you just fill my dang order? Alright, so we got filled at 12, so I basically paid an extra $12 to open the new expiration date. Let me post this in the trade alerts. New options alert, premium 101, premium. Just bought 750 UXE calls expiring 120. And I paid an extra $1 a piece. Let me see what the average cost is, though. So I still have 2 of the 750 calls expiring the 30th, and then the January 20th, I got 12 of them at 61 each. Looks like SPY just went above 381.81, so we might have to close the put debit spreads that we had opened earlier. All right. Yeah, those are down 150 at the moment. SPY's making a recovery, it looks like. Trading flat, just as I had assumed, I guess. And we went significantly above that 381.81 mark, so getting back to 380 seems pretty unlikely, but we'll give it a little bit of time just to see how it shakes out above that price level. I bought these at 50 cents each. Right now they're going for 29, so let's see. 28 is the bid price that we'll have to sell it at. I opened just 7 of them, so let's see. About $150 loss or so. That 196 over 7, I ended up getting filled at 28 when the bid price actually moved up to 29. So, of course, Robinhood always robbing me. Why is that showing? There we go. So, closing options alert, cutting losses. One premium. Just cut losses on the 381, 380 SPY put debit spread that expires today. 12.27 at 28 each. All right. Originally picked those up at 50. Okay. Originally opened at 50 each. So 50 minus 28, 22 times 7, $154 loss. 154 loss. And SPY is ripping back up as of, looks like 10:10 this morning. No news that I'm seeing on Thinkorswim. Paying higher than the ask makes sense. Keck. Honestly, Robinhood and their bid-ask spread makes 0 sense at all. Why do I use Robinhood? User interface is sexy. It's hard to get away from, even though I know they take all my damn money from the bid-ask spread. It's like a bad drug. I am moving my money over to E-Trade. I did start that process a couple days ago, so I think it's going to take a few days for the ACATS transfer to go through. But moving my money over to E-Trade, they have the fastest and the best fill prices. So, I'm happy to pay the 65-cent commission if it means getting my order filled faster. They're making so much money from the order flow. Absolutely. Yeah, I'm a masochist. I am a little bit of a masochist. Roddick, thank you. Do I use Thinkorswim? I use Thinkorswim just for the charts, just because of the customizability that Thinkorswim offers. I don't trade on it just because their user interface, like opening options, is kind of a pain. Like you have to go over the trade tab, choose expiration date, whatever you want, like January 20th. And like it's just like a standard options chain. Nothing really special about the user interface, but like if I go and buy, say, a single call option, the default is to buy 10 of them. So I have to change the default to 1 or whatever I actually want to open. And it just takes too much customization for my liking. Sorry, not sorry, Vlad. Where did I say that I'm moving to? I'm moving over to E-Trade. Try Thinkorswim Web? I might. Got out of SPY with a loss at 9:45 this morning. Yeah, SPY is actually pretty volatile this morning. I'm kind of shocked at how volatile it's been. Given the lower trading volume, you wouldn't really expect much volatility out of it, but that's exactly what you're getting. Let's see. Let's compare the volatility to Friday. Yeah, it's just about as much volatility as we had Friday, but Friday we had like 20% more volume or something like that. Let's see, the first hour at least. At 9 a.m. there was 5.1 million shares traded. This morning it was actually it almost hit 5 million again. So not that much less trading volume. So maybe we have a similar day to Friday where we drop first thing in the morning and then melt up for the rest of the day. I don't know. If that's the same trading action that we get again today, we might see maybe 383. Looks like we're already headed there. So opening that trade might not be worth the risk. Let me see. Watch, I'm going to buy and call debit spread, and the momentum is just going to shift right back down. Markets are just going to take all my money today. But yeah, if I do a 383 call debit spread, assuming that it's going to be above 383 by the end of the day, if we have the same kind of trading action as we did Friday, and we go above 383, then, oh wow, these are very expensive actually. They're going for 55 cents each. Not a huge fan of overpaying. If we choose the 383, 384 strike prices, that's going for 42 cents. So even that's about 2-3 cents more expensive than it should be. So probably a lot of people buying calls now this morning after that drop. I don't know, man. Kind of want to take the fade and do a 384, 385 call credit spread. I mean, if it's paying 30 cents a credit, that's a decent freaking credit. Probably only be willing to lose like 500 max. Let me pull up some price levels. So the 382.90 price level is where we got rejected. So maybe we stay below the close of Friday. But the credit on these is just too damn good to pass up, it seems like. Let's see. 6, 7. Okay. Yeah, I'll take that. Yeah, so a call credit spread, assuming that we're going to stay below 384, I think. Yeah, 384 strike price. I'll say if we go above the mid price between 382.90 and 384.38, then I'll close out of that. But looks like we got rejected at 382.90 so far. But yeah, new options alert. P1F. Just opened a new SPY call credit spread expiring today. 12, 27, 26 credit each. 384 strike. Alright. Sweet. So, expecting same as I did this morning. Flat price action today with hardly any news, and we just got rejected at 382.9 price level from Friday's close, so might be trading between 390 and 382 or 383. Sorry, 380 and 383 price levels today. Could also open like a 380 put credit spread to turn this into an iron condor, get a little bit of extra credit. Under 300 is highly possible for SPY. I mean, my long-term price target is between 240 and 280. So like 2 to 3 years away, I think we could be as low as $240 based on where we were back in 2018. For the next year, I would say we're probably heading back to where we were right before COVID, which was $330. If I had to guess, sometime by the end of next year. Obviously, I don't know the timing for it. But sometime next year, we're probably going to be between $320, maybe $310 or so, and $330 would be my guess. Yeah. I mean, things are... The thing is, like, we thought COVID was, like, the end of the world in... Obviously, like, it wasn't the end of the world, but our reaction to COVID was worse than COVID itself. Like, the insane amount of stimulus that we put into the markets to save the world or whatever the hell we were doing, it wasn't necessary. So now the Fed has to reverse basically all the damage that they did over the last 2 years. So I think that we head back to 310 to 330 is my prediction for the next year. But yeah, it's 10:30, so I'm gonna head off. I really gotta pee, and I will catch y'all tomorrow, same time at 9:30 in the morning. Leave a like on your way out, and see y'all soon.